So it's the same thing, and as a rule of credit, your sovereign credit in any country is the best credit risk. So if you're in Pakistan, government of Pakistan would always be rated at the highest level. If you are in Zimbabwe or Zambia or anywhere, their highest credit rating would be their own central bank, and same with the US. So that is the general rule of the game of banking, that the sovereign has to be rated as the highest.
And hopefully it'll be all temporary, times will get better and there'll be plenty more money. I'm coming over to this side, sir. Keep those microphones turned on, gentlemen, please.
My name is Naeem. My question is that we have a culture of providing the benefits to the richer and depriving the poorer from those benefits. As it was being discussed earlier, that a lot of the services which the banks provide to the corporate sector as well as to the other rich customers is providing free access without charging any documentation or any charges with regard to LC or any other documentation. Whereas that benefit is not provided to the poor, which is basically not encouraging the culture of documented economy in the country. What do you say about this?
What was the question?
Yeah, I'm having a real hard time. If I just can give you a demonstration, you really have to talk into that microphone. You've got to pretend you're a rock singer today, guys. Right into the top of it. And we're missing a little bit about what you said. The concept is no free banking, is that it?
Well, what I was saying that the banks do provide the free documentation charges or no charges on the banking services to the richer corporate sector and the rich customers. And if a small customer comes, the banks do charge on them, which is basically not encouraging the culture of documented economy.
It's not fair. It could be just
you mean banks charge lesser to big customer and more to small customer? Is that your question? No, I think the state bank, which is our regulator, is very, very strict on that. There's a schedule of charges printed after every 6 months, which is a public document, and banks cannot charge different customer different rates. I mean, the slabs are there, but that's not what you can do. So the regulator are very, very strict on that. Every bank schedule of charges are 6 monthly exercise. They are printed. They are approved from State Bank, and they are a public document.
I have another question coming over here.
No, he's not.
Oh, you're not finished. Okay. Please, I'm not allowing too many follow-up questions. Lots of people want to ask questions.
I think you did not get my question. What I'm saying is that there may be scale of charges which are prescribed by the State Bank of Pakistan being the regulator of the banking sector, but many of the time to the big customers those charges are waived off, whereas to the small customers those are not waived off and they are charged. And that's why we are not encouraging the culture of documented economy.
I think, to be honest, I mean, his point is correct. The charges are approved by the State Bank of Pakistan, but banks have discretion to waive, and they would only waive to very large and big corporate customers because they make money elsewhere. So obviously, like you said, banking sector, we should not see the banking sector as a philanthropic arm of anybody, or neither as a source of government of Pakistan to document that. So it's all really based on the bottom line issues. I mean, the banks would have to make profit. I mean, for retail customers, it will have to levy more charges. So if you're doing a transaction for 100,000 rupees, the basic documentation of anything costs a lot of money to the bank. But when we're dealing with a customer who's borrowing from us 5 billion rupees or 3 billion rupees, then compared to those charges, these things are minuscule. So I think it's just a matter of economic theory. I mean, that's about it really.
I'm good with that. Actually, what I was referring to the charges, actually we're coming from different. If you mean lending point of view and document charges, is different. But when you borrow money from a client, see, you have different slab. You can go to different slab and get different interest rate. But in the same slab, the bank cannot differentiate whether you're a big customer or a small customer. That is protected. That's what I was trying to say.
Okay. Let's move on. We have another question here. Sir, please.
Yes, this is Mubashir Hussain representing Ericsson Pakistan, and my question is basically to Atif and Irfan, and is that we as a industry are working in an environment which whatever you're gonna do carries some risk with it by default because we are working in this economy. And we heard banks being that they want to be prudent, which is good, and I think so does wants the CFOs to be as a custodian of the shareholders' value. But the question is, this risk is there and both the parties want to be prudent enough to protect themselves. What will happen to the risk? How banks want to deal with this risk? I'm more asking a specific, how they want to share this risk together with us through which new business models?
And this comes back to the partnership element.
Well, you see, I think I once handled this type of question before. The pricing which we are charging goes back to the question which our friend raised from the bottling company. The price which a bank is charging is a direct correlation of your own credit rating as well. Credit rating doesn't have to be rated by a company, but your credit standing in the market. So you see, being KIBOR being a benchmark, so you see a lot of companies are borrowing at rates which are extremely close to KIBOR, and some are borrowing at KIBOR plus 3 as well, for example. So there is a 300 basis point spread, and that really, better governance. So, if the CFOs are more tighter CFOs and more prudent CFOs and more open CFOs, then obviously the rate goes towards KIBOR. If the disclosure is not there, if the reputation is not there, then the rate goes towards maybe KIBOR plus 3. And I think beyond KIBOR plus 3, quite frankly, I think we probably stop lending as well. So I think you guys would have to make an effort to bring that partnership in terms of getting a better rate from the banks. It has to be more disclosure. You have to be more upright. And the transparency has to be there. And as a result, I think you'll get a better deal from the banks.
Would you agree with that?
Most of the banks have a very stringent risk rating system. So it's a simple risk reward. Whatever risk you fall into, that's how you're priced. It's very simple.
And the banks really have to do that. In fact, if you didn't do that, you'd be accused, on the other hand, of just being careless. And so you're damned if you do, damned if you don't, I guess. So, sir, can I take a question from you here?
Yes, my name is Zamanat Abbas. I work for Tescon Engineering Company, which is the biggest engineering company operating in Pakistan as well as in every Gulf country. I have just one, it's not a question, it's just an observation. Because it's a one-off type of company in Pakistan which is working as a project engineering and management company, I find often, because the gentleman sitting representing the local banking sector not involve any European bank, I often find that the local banking system has very little know-how about the project financing system. Normally, unlike India or some other developed countries where the engineering sector is growing and the banks are very much involved in the growth, here what I find that I get that when I deal with the European banks, I find relatively they are better off. But when I deal with the local banks for the project financing, which is relating to the fertilizer, infrastructure projects, power sector, recently we are very much now in the wind power, then I find that our banks are not really playing that role, because as the gentleman just said that they are ending with lot of liquidity, but is still trying to put the money in the treasury bill instead of putting that money in those sort of projects where actually the economy is really going to get good value addition. So my suggestion is that, so please train your bankers so that they can be well familiar with how the project management company do work, unlike the FMCGs. When I deal with the number of Arab and Gulf banks, they are very much in that tune. So this is my request to you, that please put them so that they can also understand. This is not like a retail shop or like the money comes, because the project takes 1 year, 2 years, sometimes 3 years, and that is a way of financing the project. Here I can suggest that if the local banks get familiar, then I can, at least that I see that they can play important role instead of putting that money in the treasury bill and again going to the government exchequer and finally ending nowhere. Thank you very much.
Super. Point taken. Pick up on this, please.
I'll answer that. See, I would disagree with you. The presently local bank, the market share of 5 big banks is more than 60%. So every transaction happening in this country is done by local banks. Foreign banks have a very little role to play in some very niche market.
But all he's saying surely is that you've got to improve.
Talking of HBSC and every other big bank, I think they all have specialized division. We have investment banking division, which has